I'm just impressed that you were in Canada and you came back home to America. Like that's not sure I would have done that, but I'm glad you're here. Let's dive into it. Hello and welcome back to the Plugged In Podcast, a weekly news show all about the future of transportation. I'm Patrick George, editor-in-chief of InsideEVs.
And I'm Tim Levin, senior reporter at InsideEVs. On this week's show, GM's EV sales are through the roof, but it's getting slammed hard by tariffs. Tesla finally talks about its cheaper model, and China flexes on us with affordable solid-state batteries. But first, how's it going, Patrick? I haven't seen you in a couple weeks now.
It feels like I haven't done this in my office with you in forever. Good news. It's no longer like excruciating heat wave season here in upstate New York. Fun fact for our listeners who probably don't care. We usually record this on Wednesdays, and we're doing it early Thursday morning now because a pipe in my basement exploded last night about an hour before the podcast happened. And I just kind of heard like a showery noise and went downstairs and saw like the clean toilet line. Thank God it was a clean toilet line, just pouring water, fire hosing water onto my main electrical panel. And if you're into EVs, you probably learned a lot about like electricity and how power works. And I distinctly remember like when I moved in feeling like, I don't know if that pipe should be right next to that main panel. And then I proceeded to do nothing about it for 4.5 years. So this is, some DIY home.
A cautionary tale.
Yeah. DIY home repair advice from Patrick George. One of the worst to ever do it. How about you, man? You had a better week than I am. You were on an island up in Canada, I understand, right?
Yeah. I took a little time off, did a bunch of swimming, canoeing, hiking, that kind of stuff at a friend's place in Canada. So I'm in a much more relaxed state than you, I think. And I rent, so I don't have to deal with that kind of stuff like ever.
Yeah.
So I'm good. Shall we get into the news? We have a lot of it.
I'm just impressed that you were in Canada and you came back home to America. Like that's not sure I would have done that, but I'm glad you're here. Let's dive into it.
It was tempting. All right. So it's earnings season, which is kind of like Christmas for those of us who cover the auto industry, except there are no presents and you listen to
you just get more work to do.
Yeah, exactly. That's your gift. Is remembering what the difference between operating and net income is. So this week, GM and Tesla both reported their earnings, and there are a couple of big things that have been on our radar as these earnings come out, which is how are EV sales doing in general as America prepares for these policies to go away, for tax credits to go away, and how are these companies doing in the era of tariffs that have been brought down by President Trump.
Yeah, this is a gentle reminder to our audience that following the passage of Trump's big, beautiful bill, the EV tax credits will expire completely on September 30th, and that's all of them. That's the used EV tax credit. That's the leasing loophole. That's the $7,500 off the financing of a qualifying car, all of it. So see your whatever dealer, your Tesla, Rivian, Lucid, Hyundai, whatever dealer while you can, because these deals won't last. They're being phased out because of policy reasons.
Yeah, Toyotathon is on.
Except
everybody.
It's not. It's off. Yeah, it's off.
Yeah. It definitely seems like GM's shoppers got this message. In the second quarter of this year, GM's brands sold a little over 46,000 EVs. That's up from around 32,000 in the first quarter and up by over 100% since the same period last year. So Q2, GM's EV sales doubled since last year's Q2.
Yeah, and like normal civilian people I talk to like don't seem to realize this, but like General Motors is kind of killing it at this stuff right now. So we love to see it.
Yeah, a few highlights: the GMC Hummer EV and Sierra EV, two big EV trucks, up by over 100% from a low base. Like not a lot of people have been buying these things in general, but they're up. Chevy is now the number 2 EV brand in America behind Tesla, very far behind Tesla, but still number 2. led by the Equinox EV, which is a car that we've talked about a lot. This is now this is their cheaper EV crossover, and it's now the third best-selling car in America through the first half of this year. Sorry, not third best-selling car. Third best-selling electric car in America through the first half of this year, and the best-selling non-Tesla EV.
That's super impressive, and good on the Equinox EV, which was our Breakthrough Award winner last year, proving yet again that we are right about everything, and everyone else is stupid and wrong except for us. Now, this is super interesting, but I am curious which Equinox EV people have been buying. And the car companies almost never break down like what trim level is being purchased or what model in a certain range. That's just like it's not something
Never.
the industry does. They never do this.
Yeah.
It's just kind of frustrating sometimes. But like, I'm curious if it's the super cheap Equinox EV LT, which with the tax credits, which are going away, you can get for like mid to high $20,000 range. And that's a kind of a pretty bare bones car, like cloth seats, not a ton of options, but you get a good EV, good amount of range for cheap. Or if they're springing for, some of the higher models that have some better equipment and like Super Cruise and leather and stuff, because there's kind of a big gap in the Equinox EV between like the bargain basement one that everybody knows is like America's best EV deal, and like, I hate to say it's like kind of one that's like equipped that you'd actually want to drive. Either way, people are buying Equinoxes, so it's pretty cool to see.
Yeah, I mean, personally, like, yeah, the thing starts at 35,000, and then, you subtract the tax credit, that gets you to the high 20s. Like, I would probably go for the one with the Super Cruise and a couple other things. So
Yeah.
I bet that's what most people are doing. So yeah, Chevy's doing pretty well here, but I think Cadillac is also a really big success story. Cadillac now claims to be America's #1 luxury EV brand, and the #5 EV brand overall. And one of the kind of big trends that we're seeing from this company is that they are stealing buyers from other brands in a kind of really big way with their EVs. So about 75% of Cadillac Lyriq buyers come from other brands, according to GM, and about 4 in 5 buyers come from other brands who are buying the Cadillac Optic, which is the Cadillac's newer, smaller, cheaper electric SUV. And this is a good stat. 1 in 4 Cadillacs sold in America were electric in the last quarter. So that's a lot.
That is pretty cool. And on the stealing buyers from other brands thing, that's what's called a conquest to the auto industry. It's what you want. It's how you build loyalty. In theory, anyway. Tim, are you a brand loyal guy, or do you buy a lot of different stuff when you've owned cars?
I don't buy a lot of cars in general. I've owned 2 cars, and they were from 2 different brands. So no, I'm not really brand loyal. And I think being in this industry, you get to drive a lot of stuff, and so it's kind of hard to be super brand loyal.
Yeah. I've kind of owned a little bit of everything myself. It usually goes in waves of like, I own like unreliable crap, like an 80s BMW 7 Series. And then I'm like, screw it. I just buy a Toyota and have that for a while or something. So it's,
that seems like most auto journalists, their
Yeah.
loyalty is to unreliable crap.
Yeah.
Cool, unreliable crap.
It's why so many of them drive Mazda Miatas too. It's like, for all its other strengths, like the damn thing just works, like you know what you're going to get. But yeah, it's definitely good news for Cadillac, how everything's going on the electric front, right?
Yeah, for sure. I think it's a big win for a brand that has had its challenges over the decades, right? Cadillac sells some cars in Europe, but it's not anywhere near the sort of big global luxury powerhouse that BMW or Mercedes-Benz is. And it's struggled with a bit of an identity crisis up until this kind of EV moment.
Yeah, I don't want to like dogpile Cadillac, but it's like kind of as long as I've been alive, almost, because I was born in the '80s. Like I don't want to invoke the Cimarron because they'll never live that down. But you have to admit, it's like it kind of was in the wilderness from its 1960s or 70s heyday till fairly recently. Like you had, the Germans showed up in America. They started eating Cadillac's lunch. Then Lexus really started eating their lunch, and now they had those great like art and science designs, and like the Cadillac V cars of the 2000s and 2010s which were awesome and are still awesome today, but like they never really hit like critical mass. And so now Cadillac is seeing this like great rebirth as an EV luxury brand, and it's maybe the best thing it's done since its cars had tail fins. Especially as a bunch of these competitors get nervous about an electric future, it does seem like Cadillac's pulling it off.
Mm-hmm. Yeah, and for the people out there, I'm sure there's nobody who doesn't know what the Cimarron is. Definitely not me. What is that? Why do you bring that up?
This is I hope enough time has passed for them that this is kind of forgotten about, but it was in the 80s. They kind of reworked one of their like Chevy economy cars, which were also terrible at the time, and it was really just this kind of compact, ugly little thing that nobody loved, and it was just sort of infamous for decades. That's why I say it. I almost didn't want to bring it up because it's like it feels almost unfair today. But like that's kind of that is you have to kind of bring up the kind of the dip that Cadillac had for a long time. And then, like I said, to its credit, like it made great cars in the 2000s, the 2010s. Like I did a lot of stuff I wouldn't admit to in court in like an ATSV and a CTSV, but they never quite really like pulled off like beating the competition in terms of sales and stuff. And now that's sort of what they're doing. So I think that's pretty rad.
Yeah. So both Chevy and Cadillac seem to be stealing Tesla buyers in pretty big numbers, or at least potential Tesla buyers. And I think the question now for these brands and for all EV brands is, can they keep this hot streak up after EV tax credits expire at the end of September?
Yeah, when Kevin Williams was writing about this for InsideEVs this week, he brought up a great point, which is that Cadillac seems to have been really consistent about the deals and discounts it offers on these EVs, whereas a lot of the other brands have been up and down and kind of hard to track. Whereas I think that right now it's like you kind of have to help the buyers get into this world a little bit, and once they do, every piece of data we've ever seen shows that they don't leave. That they like 90% of people stay with electric cars. So I think that they're doing the right thing by sort of meeting this customer where they are and kind of letting them know, like, hey, we're going to help you into this thing, and it's working for them. So we'll see. I think that the tax credit thing might be more of a Chevrolet problem, honestly, because like if you're paying for a Cadillac, you're used to paying for more there. You get a lot more for your bang for your buck, but on the Chevy end of things, like the Equinox, we'll see if that Equinox LT is now like a 35 to 40K car. That's certainly a tougher sell in my mind.
Yeah, I agree. I mean, I think all the research that we see, and it's just kind of common sense, says that like, yeah, once these credits go away, it's going to be harder to sell these cars. Like more, every dollar you raise the price, you lose some customers. So we'll have to see, like, do these companies, make up for that with their own discounts? Do they bring down the cost of that Lyriq, add an incentive to that Lyriq or that Equinox that kind of make more sense to people? And we'll see. We'll see if they can continue this kind of like, real, pretty fast growth, or if it'll grow a lot slower. My bet is kind of on the latter, growing a lot slower over the next year or two.
Yeah, indeed. It's not all great news for General Motors, obviously. Profits are down this quarter because of the hits from President Trump's tariffs. They're booking a $1.1 billion with a B dollar hit from that. And Mary Barra, who's GM's CEO, said in her letter to shareholders that the company is investing an additional $4 billion to reshore production in the United States, especially pickups and SUVs. And she said, "We are positioning the business for a profitable long-term future as we adapt to new trade and tax policies and a rapidly evolving tech landscape." Meaning, we got to go electric and software driven for time, but all the rules we were playing by the last few years have been thrown out the window, and we're dealing with it. Yeah.
Yeah, and we're able to sell these gas cars for a little longer, so we're gonna turn our attention a little bit toward that.
Yeah.
Yeah, GM still expects, this is what it said earlier this year, they still expect tariffs to hit their bottom line by up to $5 billion this year. And they're not the only one. Stellantis said this week that tariffs costed around $350 million so far this year. It made them sell a lot fewer cars and contributed to a $2.7 billion loss in the first half. I think it's worth just like these tariffs have been very confusing and changing. So I think it's worth just recapping real quick what exactly is happening. As a refresher, Trump slapped 25% tariffs on imported cars and car parts in early April. And that hits companies like GM and Stellantis because even though these are American companies, Stellantis partially
Sort
so,
of. Yeah.
they make a lot of cars and a lot of car parts in Canada and Mexico. And in GM's case, it also imports some of its very cheapest vehicles, the Trax and the Trailblazer, from South Korea. So GM gets hit on several fronts here. And there has been a little bit of interesting tariff news this week while we're on the subject, which is that Trump announced a deal with Japan that reduces the tariffs on Japanese-made cars to 15% from 25%, which understandably, I think, kind of roiled the big three American car makers. A group that represents them was basically like, it doesn't make sense that Japanese-made cars with absolutely zero U.S. content would be subject to lower tariffs than, for example, a car made by GM in Mexico or a car made by GM in America that has all these parts from Mexico and Canada. So I kind of, that kind of makes sense to me that I mean, it doesn't make sense that, an American car company would be subject to higher taxes than a Japanese one.
Yeah, it's I think he wants something that can never be obtained here. Like Trump has long complained, we buy lots of Toyotas in America, but nobody in Japan buys an American car. It's like, well, we don't make the cars that they want. Like the Japanese make like Tundras and Tacomas and like the Sequoia and stuff for us, and like General Motors and Ford not make like 600cc micro cars, and I don't think they're going to start doing that. Like the times that we've tried to make cars for their market have failed pretty abysmally. Although I will say, like, the Japanese do have a taste for like Corvettes and Camaros and even Mustangs. Last time I was in Japan, like the cool American stuff, they might spring for that. But like, the American auto industry is not going to like make great inroads into the Japanese micro car market. Like tariffs or no, I would pay good money to see that happen, frankly. So we'll see there, but I don't know. In the meantime, like you get why the United Auto Workers and other groups are pretty rankled by this.
Yeah. But we will close on a positive note for GM. It's continuing to invest heavily in cheaper battery chemistries like lithium iron phosphate, or LFP, and lithium manganese rich batteries, or LMR, which are the cheaper workhorse batteries that will also mean cheaper, higher range EVs in the future. We've talked about this before, but LMR in particular should really help America break free of China's battery supply chain. This is a new chemistry that GM is working on as an alternative to LFP, which is really dominated by China. And the reason we're talking about it is because GM CEO Mary Barra had a little update on that front. She said basically that the potential savings on LMR might be even greater than using LFP at today's metal prices, for nickel and cobalt. So pretty cool. Even better cost savings than LFP, which is like the cheap battery chemistry right now in the world.
Yeah, and I'll note very quickly, Ford is working on LMR batteries too. And I think it's really cool to see like this, like General Motors versus Ford, like technology race, but it's for like batteries to beat China. Like, I don't know, as an American, I'm kind of like, yeah, that's cool to see, I think. But yeah, it's they've had some good news on the battery front. They're definitely playing the long game there by building those factories, continuing to invest in technology for the day that, like, we do see wider EV adoption. This has become a long-term play at this point. And GM's doing a little bit better in China too, after some restructuring. Sales are up to 6.1 billion last quarter, up from 4.7 billion a little earlier. Not too shabby in a country where the Americans and the Europeans are kind of getting wrecked by the local folks. So, speaking of companies having struggles, Tesla also reported its earnings this week. Why don't you just take us through how that went, Tim?
Yeah. Tesla reported earnings this week, and all the important numbers looked pretty ugly. A lot of minus signs on that earnings report. Not exactly shocking, since we already knew that Tesla's sales continued their slide last quarter when they dropped by around 14% to a little over 380,000 units. In Q2, automotive revenues fell by 16%. Total revenue fell by 12% to $22.5 billion, and operating income fell by 42% to around $900 million. Tesla's operating margin for the quarter dropped to 4.1%.
Yeah, so a lot of numbers we threw at you just now, but not a lot went right for Tesla in the last 3 months. It has blamed the decline in vehicle deliveries, lower selling prices. It's discounted the heck out of a lot of those cars, which means less money. Which, to go back to what we were saying about GM earlier, it's like you could cut prices on your cars, but according to the tenets of capitalism, you make less money when you do that. And also lower revenue from regulatory credits. That last revenue stream is important because that's the system that Tesla uses to sell regulatory credits to other car companies that aren't meeting their emission standards. And since all of those rules are going to go away, and the Trump administration says we're not going to penalize you for that stuff anymore, potentially billions of dollars that Tesla made every quarter pretty reliably for years is about to go to zero. So not great.
Mm-hmm. Yeah, it was more like hundreds of millions a quarter, but over time, billions for sure.
Yeah.
The Tesla executives also mentioned the unpredictable tariff environment, which is something that all car makers are dealing with right now. But fundamentally, and this is something we've talked about a lot, this is a car company whose sales are shrinking, one that can't command the same demand or pricing power that it used to because there's more competition, and its reputation is not doing so hot right now, at least among a large chunk of its customer base. You know, you look at Cadillac. Do you know who runs Cadillac? No, you don't. You probably don't. And that's a good thing.
I do because it's my job, but most people don't. Yeah.
I'm speaking to the audience, Patrick.
Like broadly. Yeah. Yeah, that makes more sense. Yeah.
Most people don't know
who runs.
Steve
Cadillac, by the way. He invented the Cadillac. That's who it is, in case you didn't know.
Yeah. Exactly. You know, you think about these Cadillac Lyrics and Optics flying off the shelves, and it's like, yeah, because people don't know or care what the politics are behind this brand. It doesn't have any kind of associations, and that is really good for a car company, right? To not have this sort of negative stink around it like Tesla does right now.
It's also like that lineup is old, and it's also so limited too. Like I'm currently driving I rented the latest Model Y, and like I actually really like it a lot. Honestly, I've been surprised how much I've enjoyed this car, and I think in like a lot of ways it's still kind of like the all around EV for everybody to beat. I wouldn't consider a luxury car though. If you want something nicer, where do you go in the Tesla line? You get a
That's
Model
true.
X. You get a Model X, I guess. That's been around forever, and it's kind of the oddball in the family. Or you could get, Cadillac Lyric, or BMW has the iX3 coming out next year. If you need something bigger for your family, you get an Ioniq 9 or an EV9, or like there is room to go in this space that like this brand doesn't offer anymore. And I think that's starting to hurt them, and I guess that's kind of what I want to ask about next, because I missed the entire call because I was dealing with basement pumps and dehumidifiers last night. You unfortunately had to listen to all of it. And what's going to get this company growing again? Because clearly the Cybertruck is not that, right?
Right. And so the big question on a lot of Tesla investors' minds, the big question we have, just because we're curious about it, is like, what is this next model, right? What is going to get Tesla growing again? They rely extremely heavily on the Model Y, which, like you say, great car, but like it can only take a company so far to have like one or two very high selling cars. And we did hear a little bit about what's coming next on the call. As usual, it was a lot of AI and using the word inference and talking about how many millions of Optimus robots they're going to build, all the sort of, autonomy and robotics talk that has really dominated these meetings lately. But Tesla does sometimes remember that it's a car company, and it did give an important update on this long-promised, cheaper model that it's been teasing for months.
For some background, for the last several years, Tesla has talked about building a $25,000 EV. And I think that we'd all agree that if any car company in America could probably pull that off, it's them, and that would be a game changer for affordable electric ownership. However, that plan is off the table. But over the last year, Tesla has said that new, quote, more affordable models would go into production in the first half of 2025.
Right. So we haven't known what exactly that new model was going to be. And now we know. Do you want to hear about it? Do you want to hear what this new, cheaper model that's supposed to save Tesla sinking sales is?
I want nothing else, Tim. Enlighten me, please. I beg you.
It's a Model Y. It's a Model Y. Yeah, pretty weird. Tesla has been super cagey over the last year about whether these new cars would be actually new models or variations of the Model 3 and Model Y. And it turns out that it's pretty much the latter, which backs up earlier reporting on this. Analysts have been asking about this on all the recent earnings calls, and Musk kind of finally just answered straight up. This analyst was like, "Okay, what can we expect these things to actually look like? These this more affordable model that they said just started production and is going to be on sale later this year." And it was really funny. The CFO started answering. He was like, "Well, we can't really speak to, the looks. We don't really want." And Musk just cut him off and was like, "It's a Model Y. It's a Model Y." And he said, he was like, "I just let the cat out of the bag." Which I think is kind of deflating. If I was a Tesla shareholder, that is not, I don't know that is what can dig Tesla out of this like limited lineup sort of situation. So my question to you is like, what do you think? Like every analyst that we've been speaking to for years has been saying Tesla desperately needs more models, more fresh sheet metal out there to compete with Cadillac, to compete with the Chinese, to give people more options, to compete with all those cars that you just mentioned. So what do you think? Does a stripped down, cheaper Model Y cut it?
In this business, you either win on volume, selling a lot of cars, or you win on profit margins, like selling a fewer, more expensive cars instead. Like that's kind of the two playbooks that exist. And I kind of feel like I want to judge it after I see it, because Tesla has a way of proving me wrong. But like I feel like just a discounted Model Y, like the Model Y Sport, the Model Y Superleggera, like the Model Y rental special that with cloth seats or whatever, like that's not going to get you volume, because it's not that sexy, it's not exciting, it's not some like game changer for cheap transportation, and it's not going to get you profit margins either. So it's a weird half measure. And I don't know. I mean, like, sans tax credits, like a decent Model Y run you like what, 50 grand, something like that. Before any
45.
Tesla 45, right? Before any Tesla discounts. Like maybe if this is like they get it like 35 grand, like Model 3 prices for the crossover, that could be something, but it's at what cost? I mean, it is deflating, as you said. Like I'm not blown away by it. And are we talking about like a metal roof, smaller battery, less range? Like what's the trade-off here? What do you think?
Yeah, I think those are all potential options. Tesla recently launched a cheaper version of the Model 3 in Mexico that had basically cloth seats. It was just like a, lower price, just cheaper materials, basically. And I'm kind of with you. Like, I think a half measure is a good way to describe it, at least as far as we understand it right now, based on the kind of limited comments that this company's made. I think a lower price definitely opens you up to more customers. Like you said, if it's a Model Y variant that costs 35 grand, they're going to sell more of those than they sell of the $45,000 one. I think just by the kind of laws of pricing. And that's kind of what Elon said on the call. He was like, people want the car, they just can't afford it. I think I agree with you. It's like, I think it really depends on what this thing actually ends up looking like. Is this truly a Model Y just with like cheaper stuff inside of it, smaller battery? Is it actually a version of it that might be a little bit smaller, a little bit of a different shape?
Yeah.
It's really hard to tell. He said it's a Model Y, but they also keep calling it a new product and saying that, talking about changing over production lines and things like that. So I think it'll all depend on what this new Model Y actually is and how much it costs. If you'll recall, they actually, it seems like despite all the industry watchers telling them they need to stop relying on just the Model Y, which sells over 1 million units a year, they're just like, what did you say? We're more different Model Ys? Like, great. Yeah.
Hit same button, more. Yes.
Yeah, because they just released a Model Y L in China, which is like an extended kind of wheelbase one with a bigger third row. Now maybe there's going to be this, cheaper one for the US. So they're kind of just milking the car that has got them to this point. And it's not clear whether there's actually anything new on the horizon, or if the plan is just like refreshes and versions of the Model Y until we start printing money on autonomous cars.
Right. I'm glad you brought that up, because like what I do know from this call was it was Elon saying we're in for a rough couple quarters, maybe, but like in the end, autonomy is what will win out for Tesla. Like that's where they're putting their emphasis. That's where they're putting their R&D money right now. Like It's not future car product. It's like quote unquote solving the question of autonomy and autonomous driving. And I don't own a Tesla, so I try to rent one 2 or 3 times a year, and I try to always use full self-driving. This Model Y that I have right now, I will say, at least driving around like the rural part of New York that I live in, it's the best I've ever used, honestly. Like it has gotten better. It doesn't drive like a nervous teenager, and not a particularly bright one, like it used to. Like it's getting better, but like is that camera-based, AI-based approach like good enough to quote solve autonomy without a steering wheel? Like I don't see it yet. It's getting better, but it's not there. So this really is just, I think he's got the thesis of this company. That's where the investors have bought in, but it's not where their money's coming from. And like I don't know when that comes to a head for them or not, but it's and that's all before we get to like the stuff you talked about earlier, right? Like the just the way that people have reacted to Elon Musk right now. He's alienated that kind of like liberal buyer base. I don't think like conservative folks or like people who support President Trump are super a big fan of him right now, to be honest. So I don't know. I think there's just a lot to untangle with this whole thing.
Yeah, a lot of struggles for the core business, and it's really not clear whether this new model can do what it needs to do for this company.
Yeah.
So when's it coming out? Tesla said that it started initial production in June as planned, and that they're going to ramp up slowly in the second half of the year, and that they're indicating it'll be more widely available in Q4. And so we'll see what this thing actually is and whether people buy it.
Yeah. Yeah, like you said, your notes: cloth seats, steel wheels. I'm gonna guess roll down windows. It runs on gas now. It's got a 4-cylinder engine. It's they're selling you a Toyota RAV4.
No, it's just a Flintstones car. Just a hole in the floor. Just you got to push it yourself.
Yeah. It's a bummer, man, because like I do think that like it's like that new Model Y is a good car. It has the best adaptive headlights I've ever used on any vehicle. It has way better interior, better ride quality, better quietness than the old car did, vastly better. It's a great car with an Elon problem at the moment. So I don't know, maybe the old gal's still got some juice in her left, and we can the Model Y, the cheaper version, will take him over the line. We'll see. All right, moving on to our last segment. We had some good news earlier in the podcast about GM working to catch up to China on battery costs, but here's a quick reminder of who Daddy is. The storied British sports car brand MG is today owned by a Chinese company, specifically SAIC Motor. And when this transaction happened about 10 years ago, everybody kind of scoffed at it, but surprise, MG is actually doing really well under Chinese ownership. It's popular in China, it's extremely popular in Europe, and it's turning into kind of a tech power player too. So now in China, MG is getting ready to debut the world's first mass market small car equipped with a semi-solid state battery. So that's a little hatchback that'll cost around 11 grand to 16 grand with groundbreaking battery technology that probably the West is 5 years away from at least. So yeah.
Yeah, pretty cool. As a quick reminder, solid state batteries are this long sought after technology, kind of like the holy grail of EV battery technology that swaps the liquid electrolyte in a battery for a solid electrolyte. It's really tough to pull off and tough to build in volume, but if you can do it, the result is more range, faster charging, better safety, more reliability, less of a fire risk. And I guess it's worth mentioning, like, those true solid state batteries are not in production yet. They're still kind of in the lab in testing.
Yeah, a bunch of car companies and tech companies are working towards that, but it's not there yet. This semi-solid state battery, if you want to get really technical, uses a gel-like electrolyte, so not liquid, not solid, but a gel. This hybrid solution mixes aspects of both designs, which should also give it an edge in cold weather range too. Speaking of, it has about 537 kilometers on China's testing cycle, or here in America, that'd be about maybe roughly 220 miles of range. So like not mind blowing, but for a little hatchback that costs under 16 grand, that's actually pretty good to think about it. That story kind of blew up for us this week, like surprisingly. So I figured we mention it here. Tim, any thoughts on the little semi solid state hatchback in China that's dirt cheap?
Yeah, I mean, I take away a couple of things from it. I think one is, yeah, like China again. Need I say more? And the other is, like, it's really cool that, like I've mentioned before, the kind of tech race in EVs is far from settled, right? Like we have NMC batteries, we have LFP batteries, we have LMR batteries, we have solid state, this completely different sort of technology. We have semi-solid state that's actually happening now. And it's really cool that we don't know exactly what's going to win, what's going to perform best in these different cars and different conditions. And it's cool that we're one step closer to those solid state batteries actually being out there on the road. Other news this week, Mercedes-Benz told Automotive News that their true actual solid state batteries are going to be on the road before the end of the decade. And like, obviously we've heard automakers, they put out these, timelines all the time. But at this point, it seems like these companies have been working on it for long enough that it's actually going to be here soon. And so, yeah, I'm looking forward to seeing what solid state batteries can actually do out there in the real world.
Yeah, and this has happened in China already. It hasn't really happened in the West yet, but I think it's starting to more and more in Europe. But I'm looking forward to the day when this technology trickles down to like truly more affordable cars, and not just ones with steel wheels and cloth seats. But like the day like this stuff gets really affordable for everyday people is going to be such a game changer. And I think that's the real tipping point, is when it stops being, even great $50,000 or $35,000 cars, and hopefully like great 20,000 or below cars. Like that's the day. I hope that day happens sooner than later here in America. All right. Now it's time for Plus Minus, our segment where we talk about who's up and who's down in the EV world. Tim, who you got for me this week?
Because we spent a bunch of time kind of complaining and ragging a little bit on Tesla, I have a plus, and it is Tesla this week. I feel like for as long as I've been covering this industry, there have been these rumors and plans of Tesla's retro diner, Tesla's Supercharger. What is it? It's a diner at a Supercharger.
Supercharger diner.
Exactly. It is a Tesla has had these plans for a giant Supercharger in Hollywood that is diner themed, like a big old kind of retro futuristic diner. And Tesla finally opened it this past week, and it's like surprisingly cool. It is very innovative and creative. It is this big like circular building with movie screens around it. They have Optimus robot inside, like serving popcorn. You can buy food and it comes to you in like a box that's shaped like a Cybertruck. Like, they have really kind of outdone themselves and done something really interesting that most car companies don't do here. They have turned charging into like a really fun experience, and we need more of that. And I think they should probably put that much effort into making the next into making their next car. That would be cool.
We'll have a take soon on InsideEVs. One of our LA-based contributors is going to check it out this weekend, so he'll report back. I did see Wired's story about this, and apparently the hot dog cost $17 at the Tesla diner, and I was like, okay, what?
You know, what doesn't cost $17 these days?
Yeah, is that normal in LA? Like, I don't know. I could kind of see that happening in New York, unfortunately. So I'm assuming some cost parity in the coastal cities, but yeah, fine if a $17 hot dog is worth it. I got a minus this weekend. It is unfortunately Mercedes-Benz. Has really had to go back to the drawing board, and I think it's also just had some whiffs, like the plug-in hybrid AMG car that like literally nobody asked for. But now it's getting kind of hammered by tariffs too, and it's staring down the end of the tax credit. So it announced last week, or confirmed rather last week, that Mercedes is going to stop production in the U.S. and for the U.S. of the EQ cars, like the EQS, EQE, sedan, SUV. The ones that were going to be made in America or were to be sold in America are ceasing production in September. They're still going to make them here in America and in Germany for the global markets, but America's done. Dealer has been told, close your order books. It kind of makes sense. Like, sales of those EQ cars have been pretty abysmal last few years. A lot of people never really warmed up to the styling of them. And the good news here is they've been discounted really heavily. Like, we've seen like $15,000 price drops. So if for some reason, like, you've waited this long to get a brand new EQS, I don't know who that person is, like, now's the time to do it. But, I'd merely add that they, as controversial as they look, they're kind of insane deals on the used market. And like, I don't know, the day that like an EQE sedan is like 25 grand, like I'd be real tempted to make a bad decision there. So we'll see. All right. Thanks for listening to the Plugged In podcast from InsideEVs. We'll be back next Friday. Today's show was produced by Michael Perkins and is brought to you by the Motorsport Network.
Make sure to hit the follow button wherever you get your podcasts and send us your questions about the EV world to podcast@InsideEVs.com. See you next time.
See you next time.